Gold is down almost 0.5% at $1,090 an ounce. Silver is also down more than 1%. Today is the world terrible day for commodity. Let's continue the conversation. Let's start with the development in South Africa. Let's cross over to Conrad Bosson, financial correspondent for DWTV, Channels Television, standing by for us at the Frankfurt Stock Exchange, a day of historic development. Let's start the week with you. Conrad, good afternoon. We thank you very much for coming through. Let's start with South Africa regarding the markets. We've heard from Gordon Parvin, who's answering questions from journalists in South Africa right now about the state of the economy and the days ahead for Africa's most advanced economy. Talk to us about what you've known and how is the market in Germany or across Europe taking this development in Africa?
Well, first off, Bosun, let me just remind our viewers that the Fitch Ratings Agency just last week downgraded the rating of the South African Republic to a rating only slightly above junk rate, so at a very low investment grade rating, which means that the decision of the President of South Africa, Jacob Zuma, last week to replace the Finance Minister, Nene, with Mr. Van Rooyen came at a very delicate and difficult point of time. And that's another reason why this decision triggered so much disappointment on the market, weighed on the rand, and caused uproar among many investors. Now, the reversal of this decision is causing relief also on the markets here. Remember that also European companies, German companies, have very close connections and ties with South Africa. The new finance minister, Pravin Gordhan, is considered to be a more stability-oriented politician, somebody who is trusted to help the South African Republic to remain on track. That is a short-term positive reaction. What many people I talk to here also say is that this step, this 1 week decision this way, the next week a decision of the other way by the President of the South African Republic, Jacob Zuma, has really hit his reputation hard. It is not a sign of a very wise and long-term oriented policy. And remember, we're facing the Federal Reserve's interest rate hike this week, something which will have an impact on the state of finance of many emerging economies. South Africa is facing troubles in its relation with the international investors anyway, so of course these policy moves haven't helped South Africa's reputation on the market in general.
Conrad, okay, let's talk about something that looks like a very much bigger picture, and of course $16.5 trillion climate change deal hammered out in Paris last week or over the weekend was quite a big story. Germany is at the center of that, one of the key countries to implement or be the transmission mechanism for this major global energy deal. Is this a trading discussion for today among investors, especially in the energy market?
Well, big oil is making way for big solar. That's the headline I heard here this morning. It's definitely one important story today, and many shares of, for example, wind energy companies are in demand. Other shares of the renewable energy sector are interesting. Not all of them are in demand. One analyst I talked to also said to me that investors should really pay attention and not just put money in renewables, not regarding the business models and the close figures. Many investors were burnt with solar energy in recent years. Remember that Germany once was one of the leading technology countries in terms of producing solar energy panels, and then China came in and made a lot of competition against Germany's businesses, so this whole sector came deeply into trouble in Germany. So it's really important to closely look. But of course the general story is that everything connected to fossil fuels will face tougher times in the decades to come, even though that accord from Paris is a very light policy accord. I mean, emerging economies which are not so interested to implement very strict fossil fuel saving policies are not getting sanctions. So it's going to be a couple of years until we really will see a positive effect from all this.
Then we're now down to, of course, the final 72 hours or so before US Fed decides, and it looks like everything is crumbling. Gold, silver, crude oil, everything seems to be damaged this Monday. So, the key question for you folks in Europe, how do you think the ECB should take a yes or a no vote at Tuesday FOMC?
Well, in general terms, the ECB already has announced that it is prepared for everything coming from the Fed. The ECB really wants to make sure the financial system and the market participants that cash should not be a problem whatsoever. The decision and the comments from the Fed on Wednesday will be. In the long term, it's going to be interesting to see how the Fed manages an interest rate hike, a change of interest rate and monetary policy in the United States. It's very likely that the discussion in the Council of the European Central Bank will become louder when it comes to becoming even more generous in terms of monetary policy here in Europe, when it comes to maybe even lowering interest rates here in Europe further. There's a lot of opposition, or there is some opposition against that in the Council already, especially coming from the German head of the Bundesbank. And with the change of policies in the United States, it's quite likely that the discussion will increase here and that people will start to ask, is it really worth having such a generous monetary policy in the long run here in the ECB as well? It's going to be the topic of this week. Everyone on the markets is sort of bracing for what we can expect on Wednesday from Janet Yellen, and I'm sure that the both of us will be talking about this a great deal this week. Wilson.
Well, Conrad, we've waited for a couple of months. I'm sure we can wait the final 72 hours. Conrad Boson, DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange. When we come back, Kenya is holding the World Trade Organization's conference in Africa for the first time in history. We'll talk about that after the break.